Hello and welcome to the next episode of War in the Market. Today was again what we have feared over the last few days to happen, has happened, is that the international geopolitical crisis took a turn for the worse. Oil prices shot up. As I speak now, they have reached $105. So naturally, the impact of this has been felt across the flows and across the market performance. First, coming to the market performance today, the Nifty 50 was down only slightly under 1%. So there was no heavy selling. The mid cap, the small cap, micro cap, all were negative, but roughly around the same range. In fact, micro caps fell the least in terms of just a quarter of a percent fall, right? But the important trigger for the market, if you want to observe, over the last few days, I've been speaking about the fact that advances have exceeded declines 2:1. On yesterday, it came down to 52:48. But today, it reversed. Today, we had about 1,031 stocks rise, but almost 1,934 stocks fell. So clearly a shift in the mood in the market in terms of the fact that the oil price hike due to the geopolitical tensions worsening has hit home, right? And this is precisely what I had been warning about in terms of the retail going and buying heavily over the last few days. It is for days like these when, unless the war situation gets resolved, it's not the time to take a strong call and go and buy. Anyway, what happened today was that the FIIs, after being marginally kind of positive, negative around 1,000 crores, today actually sold 3,500 odd crores in the market today. DI stepped in with some buying, but a very small amount, 900 crores of buying. So they couldn't absorb all that the FIIs sold. So as a result of which, DIs are still obviously waiting for the earnings season to play out. And yesterday I mentioned to you that a lot depends on the Infosys result today. Well, in the super phase, the company gave a very bold face to it and talked about their book and all of that. The fact is that those numbers, were not very, very exciting. So that's one. And the second aspect is that I don't think there was a really big statement around the AI, which market is expecting from the IT bigwigs. So IT was one of the underperforming sectors today, right? The other thing which happened because of the oil price spike is that there was pressure on the rupee. So the rupee came back again and crossed 94 today after RBI's efforts and holding it down to 91, 92 levels for quite some time. Today, the tab burst open, it's crossed 94. So as a result, 1 year forward, the rupee is now looking like 97.40. So I think that normally that's a tailwind for IT because when rupee weakens, IT is seen as a defensive. But because of the negative results around HCL Tech and others yesterday and the general mood of gloom around IT, it didn't benefit. But what benefited was another export-oriented sector, which was pharma. Pharma was the best performing sector with a 2.3% upside today. So that took all the benefit of a weakening rupee. So what hurt in the market? Well, you saw the advanced decline ratio, which means that I think retail also, in addition to DIs were buying. So if the FIs were selling in one way, but the DIs buying was not enough to absorb it, and retail also was probably either booking profits or exiting the market. So if you see that story, then the auto, the realty, the consumer durables, PSU banks, all of which had rallied with a lot of retail interest, were the ones who felt the most, around 2% each. So clearly, retail took some money off the table today, which is good. At least let them book the profits and go. Because, like I said, if they did that these were tactical traders who entered a few days ago and exited today, that's well and good. But if you were a long-term buyer and putting lump sum, then you would not have had a good day today. So what is the outlook for tomorrow? For that, let's look at the F&O action today. And clearly there is a sign that FIs are now turning a little bearish. One is the cash sales of 3,500 crores. But if you look at the long short ratio, right, I saw it that it's gone down to 24.76. 24 long, 76 short. And yesterday, if you remember, I said it was 28.72. So FIs have increased their shorts today and reduced their long in the proportion, right? So it increased a bearish tilt. Similarly, the put call ratio, which is another indicator, has dropped to 0.78 from 0.87 yesterday. So the lower the put call ratio, the more bearish the outlook. So clearly FIs are holding a bearish outlook, right? So for the tomorrow, I see the gift nifty right now, however, trading fairly flat. So while FIs are building up a lot of short positions and a bearish outlook, right, the gift nifty is not yet reflecting that. So tomorrow, well, again, every day, why tomorrow only? It's dependent on the news flow that's coming out around the war. So that's what's going to dominate. So no need to change any strategy of what I recommend. Small amounts, keep accumulating, keep diversifying. You can't predict which sector will outperform on that particular day, right? You've seen every day some sector has got the best performer award, some sector has got the worst performer, which is quite opposite to what was the previous 2 days. So very, very risky terrain in terms of trying to predict a sectoral winner. Stocks, of course, I don't comment on, but sectorally also, it's proving very difficult to predict a winner. So stay diversified is my message. Do not panic. And if possible, keep buying little amounts through the market. Thank you and meet you with my next update.